The value of stocks and other investments is approaching an all-time high. Those who were able to buy low and sell high during this market collapse got their money more than triple in return. Most people took decades to save $80,000, but they could have saved themselves 20 years and tripled their money in a few months if they had taken advantage of this opportunity. I'm not joking. Exactly the same share of Tesla that cost $500 just a few months ago is already worth more than $1,500 today. Amazing, right? However, a great number of people failed to take advantage of this chance for the simple reason they do not have sufficient knowledge regarding the stock market. Therefore, in this video, I'll provide a basic explanation of what a stock market is and how it operates. Hello everyone, we're back with another video. In today's topic, we'll discuss some of the basic information you should know if you want to invest in the stock market. In this video, you will discover if it is really possible to earn money from investing in this market. Before we begin, don't forget to give this video a thumbs up. Make sure to hit the subscribe button and click the notification bell to be updated about different stock and financial market topics. Let's begin. The unstable and unpredictable environment of the stock market is likely the first thought that comes to mind whenever the topic of investing is brought up. It is natural to become confused in this field because there are so many statistics and data, so let's simplify it. Here's a clear explanation of how the stock market works. Imagine that you have the brilliant idea of selling items on the internet. You go out and get a group of web developers to construct the site for your business. For the purpose of making this example understandable, let's assume that you have decided on the name BryantEmpire.com for your website. It's a unique and creative name that just happened to pop up into your head. You decide to start selling products such as clothing, home accessories, and so on. You are in luck since business is growing, but unfortunately, you have an obstacle. You are gaining money, but it is not enough to allow you for rapid expansion right now. In essence, you might begin selling everything on your website right away. Nevertheless, you will require initial funding in order to rent space and establish your business's infrastructure. If you are not able to do something like that, your competitor may find a way to use your lack of action and conquer you as a result. But there's no need to be afraid. I have an excellent suggestion for you. You can raise capital by selling a stake in your business and investing it in the expansion of your company. Let's imagine that $1 million is placed on the value of your business. Your company will now comprise 100,000 individual stocks, each of which will be valued at $10. Let's imagine you were successful in persuading an investor to deal with $100,000 in exchange for 10,000 shares of stocks. Congratulations! Now that you have the funds to build your infrastructure, the investor will receive a 10% ownership stake in the valued company that they helped you start. You are doing very well, and your company is expanding at a rapid rate. Yet, you would like to grow even more because of the reputation that you have established for yourself. There are a great number of people all over the country and even the globe who are interested in purchasing a minority stake in your business. However, you can't just go around selling off parts of your business from the office. You have to register your business with something that is known as the stock market. People can come to the New York Stock Exchange or the Nasdaq to purchase and sell stocks, which are small shares of companies. This market is for business and allows people to buy and sell these stocks. Given that you control 90% of the company, let's imagine you decide to raise capital by selling 200,000 shares of stock on the market in order to fund an expansion. This process will happen over and over until you become a billionaire. We have without a doubt oversimplified everything in this part of the video, but the concept presented remains the same. However, how much money do you expect to make? Take for instance, Facebook as for example. It made its debut on the stock market in 2012, offering 337 million shares at a price of $38 each. Not too bad, but when Facebook saw that so many more individuals wanted a share of the company, they decided to issue an additional 84 million shares. And would you believe it, they were successful in selling each and every one of them and collected a total of $16 billion. In a matter of hours, they went from being a millionaire to a billionaire. In point of fact, the price of the stock rose to $45 during the first day of trade after it was issued. It may have appeared like Facebook was having a lot of success, but it was far too soon to start celebrating because its value dropped to $38. The terrible news was only getting started over the course of the subsequent several weeks. the stock reached a low of $20. The price has been reduced by half from its initial level. Now, in order for us to comprehend what is taking place here, we need to get to the bottom of the stock market. Historically, investors have purchased stocks largely for the purpose of receiving dividends. When you buy a share of stock in a corporation, you effectively become a partial owner of that business. This indicates that you, along with the other owners of the company, have the right to share in the profits of the business. Therefore, Facebook has a total revenue of $15 billion. What percentage of that is owned by yours? As the day is drawing to a close, you realize that the purchase of your 10 stocks cost you a total of $1,300. But before we get into it, let's take a look at the overall number of stocks that are available. It was revealed that there were over 3 billion of them in all. I seriously doubt that your 10 stocks are relevant at this time. But let's look on the bright side. Because when we divide the company's total net income with the amount of shares outstanding, we find that each stock should receive slightly more than $5. This figure is known as the earnings per share ratio, or EPS for short. To put it another way, you should anticipate a return of roughly $54 from your 10 stocks. That's not that horrible, is it? But that's just a theoretical example. In reality, you won't receive anything at all. Whoever is in charge of making decisions on the use of this money is going to be the board of directors, and since their number one objective is to grow the business, nobody is much concerned about the 10 stocks you own. But you shouldn't be too concerned because not everyone is similar to Mark Zuckerberg. For instance, in the prior year, Apple declared dividends of $13 billion, or $2.5 for each share of stock, even though it's not a lot for a stock that costs $170. Having something in your hands is always preferable to having none at all. On the other hand, in today's market, the price of the stock is the only thing that truly matters. The value of Apple stock increased by 33% in just 1 year. That's a significant improvement. Do you know that Berkshire Hathaway, the company that Warren Buffett owns, has never split their stocks? Because of this, it only has 1.68 million shares, whereas Apple has 5 billion outstanding shares. This means that a single share of Buffett's stock can cost more than $300,000 today. However, you shouldn't be concerned about this because Buffett wouldn't mind stealing your money as well. This is why he decided to make the Class B shares, which is equal to $200 and are more reasonably priced. The topic of the stock market never ends, but this video has to. I hope you've learned something today. There are some of the basic explanations that I can give you guys regarding the stock market. If you want me to make a step-by-step tutorial, let me know in the comment section below. Before you leave, make sure to hit the subscribe button and click the notification bell to be updated with our latest uploads. I'll see you in the next one.